Deven Choksey, hello, good morning. I'm interacting with you after a really long time. Now that you've come out of your hibernation, Deven, can I also assume that bulls will also come out of the hibernation?
Nikunj, good morning and good to be back. I think after a long gap, actually. I think I was missing you. Well, I think the market definitely, I think, is trying to do its best, I suppose, getting adjusted to the reality. Probably, I think the situation is seemingly improving as I see it. Banks are lending more amount of money to the people, and I think that's what I think is interesting to note. At the same time, I think when you see even for a few days, if the vehicle registration has improved and increased, it suggests that at retail level, I think all is not that bad. And probably, I think once the inventory level gets cleared out, we might see at factory level also situation might be slightly improving from here onwards as far as auto is concerned. So at least I think the early signals suggest that yes, I think the economy is trying to show some amount of corrective upside now. And maybe if I think with this monsoon over and purchasing power, I think once again starting to get spent into the economy, I would rather think that going forward, I think next few months would be, I think, interesting to watch out for. Maybe with the reduced rate of interest, maybe with the policies pertaining to the incentives to, I think, the taxation, I would think that economy would start experiencing at least select amount of investments and maybe I think a good amount of consumption coming up hereafter. So hope for the best. I think definitely I think was probably in my viewpoint is behind us.
Are you saying that if you buy stocks now you will not lose money?
Across the board, I think that statement will not hold true, Nikunj. I think because I think the stronger companies would definitely remain strong, and I think even they probably would have a relatively better performance to talk about. But the weaker companies, I think those who lack bandwidth would have real challenges. So if you ask me, I think whether across the board, I think are we seeing the rally? My answer would be no. If we are going to continue to see the rally in select good quality stock where the fundamentals are supportive, where the management bandwidth is adequate, when the financials are disciplined, I would rather think that those companies would have relatively better chance to, I think, grow themselves faster. We have seen some of the interesting analysis in these days, I think, wherein we saw that compared to last year, when we compared the NBFC companies, I think the market capitalization of those companies haven't changed. But the fact remains that I think some of the stronger NBFC companies have actually emerged even more stronger and their market cap has improved. So as a sector, if the wealth has not changed, probably I think respective stocks have shown the performance, and that is holding true for many companies, including in FMCG basket and also I think in some of the select cap goods segment. So in such situation, I would rather like to believe that I think individual stocks should be given the preference over the general market, and that's where I think the quality will get the premium. Our quality will fetch the premium, and I would think that I think we will probably pay premium for buying the quality.
Fair enough. Let's also now take a look at some of the other earnings that we're tracking as well. Till now, in fact, we've had, we've had from the Nifty companies, I guess, a couple below, but otherwise in line, and one above estimates. We're still watching out for a couple of key numbers today. Wipro's another one that we'll be watching out for as well. Given that Deven from the IT pack now, we've seen the bellwethers come out with numbers. We've discussed, in detail, really the performance of TCS versus an Infi. What are you expecting from the likes of a Wipro, and how would you stack up your, your preferences within the pack? What would be your view given the kind of commentary we've also heard from both the two heavyweights?
Yes, Sabha, good morning. I think between the Infosys and the TCS, relatively the confidence level has gone up, I think, as far as I think Infosys is concerned. I think the company has been putting themselves on a corrective strategy for some period now, and I guess I think we have started seeing in last couple of quarters the improvement in the working for the company. So I think the relative amount of confidence for Infosys is high at this point of time. Not that I think anything is wrong with TCS, but maybe on a larger base, I think if the company has to grow further, I think that some of the large contracts will have to start contributing relatively more than what they were contributing up till now. which is not an easy task by any standard, because when you are operating in the global environment, which is not as encouraging as I think it should have been, I think the kind of a muted growth that the TCS has reported, I would think that it will continue. In any case, I think we are not expecting, I think from the larger companies or the bigger companies, a growth far above, I think 10% in real terms. So I think definitely, I think if around that level of growth, I would be comfortable in holding those stocks. Not too sure about Wipro, even though I think the company has been trying to put its best in correcting some of the strategies pertaining to the business model, I would say. I think, but not till sure, I think whether I think in respective quarters, I think they would start getting reflected. So as of now, I think the choice between Infosys and TCS continues, and maybe I think at some point of time, some of the mid-sized companies, IT space, where we feel I think the fundamentals are strong, but I think in the situation where they cannot perform due to their clients, I think they report relatively weak performance in the quarterly performance, and I'm referring to companies like Tata Elxsi. I think such companies, I think at a falling price, would be a meaningful investment to make in the portfolio.
BPCL, that's going to be another one which is going to be in focus, and another ET Now exclusive. We were the first to tell you that it's going to be privatized, and now we pick up that Saudi Aramco perhaps is weighing a BPCL stake buy. It seems they're looking to buy the government stake in BPCL as it's looking to capture a sizable chunk of India's retail market as well. The talks, it seems, are currently at the nascent stage, and that, of course, is an ET Now exclusive. Deven, how much more of a value do you see within OMC's, the divestment drive, and now that it seems Aramco may be interested in a piece of BPCL?
So I think when I look at public sector oil marketing companies, I find that I think the retail model probably I think is more interesting, and the refining model I think remains at the standard core industry level itself, which means that I think at the refinery level, unless I think you have the shore-based refinery where your raw material to finished product, I think exchange takes place on the port itself because of the refinery being port, which is the case with Reliance. I guess I think you enjoy the distinct advantage of throughput processing, as well as I think enjoying higher refining margins because of the strategic position that you have on the port. Now, anything other than this in the refining business, I think would mean that I think you are running the business with inefficiency. Of course, it's a given kind of a situation, because inbound refineries basically I think would have the logistic issues to take care of. So in my viewpoint, suppose if government is divesting and probably privatizing some of these OMCs, I would rather think that they should be separating out the retailing business vis-a-vis the refining business. Retailing business in the gas stations, etc., could possibly fetch relatively better valuation to them. That's my viewpoint. So should they do that, maybe I think one could argue that I think shareholders of BPCL could possibly be in for a future wealth creation or a value creation. I don't know, I think whether a standalone refinery sold off or standalone company sold off, and I think further wealth creation, how much it can happen, I'm not too sure at this point of time as far as I think this argument goes.
Aramco has signed a letter of intent with Reliance. That is what we understand. Mr. Ambani at the Reliance AGM indicate that the Aramco deal will culminate by this financial year. That really, took the stock higher. But what Ruchi has learned is that Aramco may also be looking at picking up stake in BPCL. And we know that government is looking at strategically monetizing their stake in BPCL. And if that happens, that really is going to be a serious message to everyone that government is open to selling what they've called as strategic assets in the past. Oil marketing companies have not been truly disinvested. One disinvestment which happened in a couple of years ago, I mean like almost 2 decades ago, was IBP was merged with IOC, but that was like government right hand taking it and giving it to the left hand, because IBP and IOC, they both were owned by Government of India. So BPCL should be in demand today. Fortis is the other one which we are monitoring. In the pre-open session, let's see how markets react to HUL commentary and numbers. Commentary poor, numbers good, margin expansion solid. I mean, just imagine HUL is now commanding margins of 24% plus. 24-25% margins are not even commanded by... Not surprised. I mean, I don't think it'll be 10% higher. It should be 2-3% higher. But I like what they're saying. frankly, the operating leverage will really kick in at this kind of a level. 24% margins. IT companies have this kind of a margin. Those are IP businesses. This is a product company with a consumer brand, and
Deeply penetrated.
distribution is the strength, but distribution penetration levels cannot go beyond where they are
Exactly.
for HUL. So what you're doing now is that you're increasing market share, you're increasing premiumization, you're introducing products, you're working on the food category, and you're hoping that Indians will consume better.
True that. IRCTC as well, seeing a smart follow-through coming in. So after that blockbuster of a day yesterday and a stellar debut at that on the bosses, today as well it sees some follow-through. The rupee is pretty quiet, just a 4 paise move coming in. I want to see what BPCL as well is up to, because it seems that Saudi Aramco may be interested in buying the government stake in BPCL. BPCL starts off by about 1% higher as we speak right now. Deven, what next for IRCTC? It's been a stellar debut, but for those who've had that missed out feeling and couldn't really get a piece in the IPO, what next? Do you think that these are elevated levels? Should one wait for a dip? Will that dip come at all? Or is it going to be one of those Avenue Supermart cases wherein you'll have to wait for a very long time for the first dip to come in?
So purely arguing from the business point of view, I think the valuation at which I think the stock is traded after listing is, I think, something which is on a premium side, purely on the business part, because I think the business is something which is not that great. They do enjoy monopoly in supplying to railway, and I think the business is okay, I would say, but it's not, it can't be growing at a very healthy speed, I think, which one would probably argue for it. That is not likely to be so. At the same time, I think pricing would be always a good question, I think, which they would be probably have to encounter when they are suppliers to railway. So this is one area, I think, which one would like to keep under check, I think, as far as I think the fundamentals are concerned. Now looking at the stock price, why the stock price should remain higher, I think this demand supply situation in the market is certainly playing a role here. If, in my viewpoint, I think if the government ended up attracting so much of bids as far as I think the IPO is concerned on offer for sale basis, I wonder, I think, what stopped them from, I think, parting some more amount of stake from their portfolio at the current price when the demand was so high. Against 650 crores, I think you ended up acquiring some more than 70,000 crore worth of bids. So probably I think they could have ended up selling more amount of shares and I think cooled down the market and the demand. But that didn't happen, and as a result of which I think we are seeing technically the market price of the stock remains high, because they continue to hold around 87% in the stock even after the OFS. So from that perspective, I would rather think that it is more of a demand supply situation which is driving the price currently. Fundamentals are what they are, and I think the stock is quoting at a premium at current levels. So I guess I think genuine investment will have to wait for buying at a lower valuation.
They have an interesting block deal yesterday. Yes Bank has exited the ownership in Fortis. Is there scope for stock to go higher?
Well, I think corrective actions of any degree is certainly of help, I think, as far as balance sheet restructuring is concerned. I think getting the cash back into the balance sheet with whichever ways in which you do it, either I think recover money from the non-performing assets or by way of selling investments. I think wherever I think possible you recover money and strengthen the balance sheet is the name of the game. In any case, I think they require to capitalize themselves further given the kind of provisioning that they are required to do. Uncertainties are there, and many, in fact. If I really hope that I think there are no many nasty surprises coming out of Yes Bank and some of the other failing institutions, I think, which have basically I think got the Yes Banks lending into them. If those kind of situations don't happen hereafter, probably in my viewpoint, I think the stock should stabilize at current level. Maybe I think one would like to argue that yes, I think new investors coming into the company, putting money into the company, and I think strategically allow the business to grow. But in any case, even if I think those corrective actions would mean that 6 to 8 quarters of I think the period in which the company should come back onto the track, maybe in anticipation one could buy if a new investor comes into the company and company starts stabilizing. But I think we'll have to wait and see. As of now, given the situation, I would like to I think wait and then probably consider adding the stock into the portfolio once the clarity emerges.
Okay, from the broader markets, Deven, because we've all been discussing whether it's time to get into any of the beaten down names. It could be anything from a pharma pick to a real estate pick. Is there anything on your list? Any names that you're tracking with an opportunity to buy?
Well, I think not too sure about the real estate on one side. Yes, I think I do agree that there would be, I think, offtake in the properties, I think, which they have constructed. Given the kind of new money which we are attracting into the segment, and given the money coming into the segment for the pay-per-use kind of a model, so certainly I think those investors who are coming into real estate space, I think they would absorb the sold inventory, and that would be a good sign for some of the companies, at least I think the larger ones who have got the inventory to offer, and that too quality inventory to offer, be it in commercial space or be it in real residential space. However, I'm unsure about, I think, the kind of margin that they would probably make, and that's where my question would be that what kind of business I think we are going to be investing in it if it is not seen as a healthy on the return of capital employed kind of a ratio. So something which I'm not too sure, even with some of the good quality companies. I would rather wait in real estate till the situation gives that kind of a clarity, because today in the beaten down market you are actually getting some of the quality fundamental stocks at a significantly lower valuations, where you have a reasonably good visibility of growth, reasonable good visibility of, I think, the company is performing and stock price in giving return in 2-3 years time. So certainly I think one would like to stay with quality, and even if it is at premium, I think one would like to stay with quality in the name of margin of safety in the current market situation. So we are probably not, I think, immediately looking at all the beaten down stocks. We stay with the quality fundamental stocks. Maybe in the insurance business we continue to like them. Any corrective downside in the insurance business, particularly life insurance companies, I think is where our preference goes.
Very quickly, 30 seconds, give me the last acquisition you've done in your client's portfolio or in your personal portfolio, stock which you bought in last 1 month and you bought it very aggressively.
Nikunj, we continue to accumulate, I think, in the fall, the companies like Reliance, companies like HDFC Life in our portfolio, and also I think accumulated part of it when I think market in between corrected, the Bajaj twins, particularly the Bajaj Finserv. But that is more of an accumulation and balancing the portfolio, no fresh addition into the portfolio.
All right.